Hey everybody, it's Tyson Strachan here on Monday, June the 3rd. I'm taking a second crack at this video because the first one went a lot longer than my typical video. So obviously last week, Johan and Nick took over, got to introduce Nick. So welcome to the family, Nick. It's been great having him. Um, and I mean, I should rebuttal against Johan's chirp. I'm not even in the video, and he's making fun of my haircut. Maybe he should look in the mirror a little bit. I don't know. But anyways, we've had two great back-to-back weekends. Last week on the long weekend, got to take Rory to the zoo where he got to feed some giraffes and just had a great time. And then this weekend, he got to go to a birthday party, classmate of his at Chuck E. Cheese. So you can imagine, 30 kids just having the run of Chuck E. Cheese with parents chasing them around, and it was hectic and a blast at the same time. And then hockey-wise, Stanley Cup playoffs are primed and ready to go. We've got the finals all set up. So June 8th, we'll get to see Florida facing Edmonton Oilers. It's going to be a blast. This should be a great series. Been a lot of fun just watching the hockey. All playoffs. Been such a great series. So that is a cool matchup. Last week, a really quiet week in the market. The PCE data came out, which is obviously that we talk about all the time. The Fed's preferred inflation data. So it ticked up a touch, but essentially, so the numbers were 2.7% year over year, 0.3% month over month, which realistically was basically in line, just, a tick higher, I guess. And the market kind of digested that. Equities dipped a little bit as rates creeped up a touch, but just a pretty quiet week overall. So taking that opportunity to just touch on something that we're very passionate about, something we deal with a lot, and revolving around a story that illustrates kind of the dangers, I guess, of alternative investments. A story came out of this Canadian company called 9 Point Partners, a fairly large asset management company based out of Canada. They handle about $7 billion in assets. They just came out and announced that $2 billion of the seven we're going to be suspending the cash distributions on those funds. So if you are a client of theirs, you just got an email, and all of a sudden, your cash distributions are cut off for an indefinite amount of time, and you have no recourse. You have no option to call them and say, okay, then I want to pull my funds out. They just close things down. We have had so much experience in clients that have come over owning alternatives, and sometimes it takes years, and in some cases it's an ongoing situation where we're still trying to unwind those and get those funds out. And then realistically, what happens often, things to look out for, a lot of times they promise superior returns with less risk, really, is the way that they kind of deal with packaging it. But the obvious point of this, I mean, red flags should be shooting up everywhere because, risk and return hand in hand, right? So if they are promising just steady outperformance of the market, you're taking on risk. There's risk somewhere in there, right? Unless there's straight fraud, but there's definitely a lot of risk involved if they are promising that. And then the second way they argue is a diversification argument. And basically, just like the correlation argument of it doesn't line up. These funds, unlike the market, where they're just constantly updated, right? Second to second, minute to minute, and you can freely trade, and there's millions of market participants constantly buying and selling. these are funds you put in, you hand over the reins, hand over control, and sometimes you just sit there and you're like, okay, I invested in this 3 years ago, and the price has never been updated. I don't know what it's worth right now. There's often huge management fees involved in them, and overall, again, it's a touchy subject. It's not something I want to go too hard on. It is just something we've dealt with so much that we are very passionate about. This story was a great illustration of it, and so we wanted to use the slow week to touch on it. And then this week coming up, fairly slow as far as economic data. We're just basically waiting for the employment data, which will come out on Friday. So that will be interesting to see. We've obviously already kind of started to see those unemployment numbers tick up a bit. So interesting going forward, just continuing to monitor. The Fed will be just continuing to watch, as they call it, persistent inflation, and that jobs market, right? And try to balance the two out. So we will continue to monitor it. If you have any questions, concerns, an alternative comes across, somebody comes to you with one, you just want us to take a look at it for you, we would be very happy to do so. And I hope everybody has a great week, and we will talk to you soon.